Hello and welcome to another Elliott with analysis. Right. The frequency of these publishing seems to be a bit um high. Right. I just published go long 5 hours ago. Right, and I'm doing another update on Go again. Okay, so the last time I mentioned that this wave one, wave two, right, and then it should be a wave three, right? So this I believe is no longer a wave three, right? So or rather, this has become a wave one of three, right? So the reason is because now we have this wave one projection, right? So if you go up to here, we realize that it's not uh the shortest wave, right? So there's two possibility over here. One is that wave three is shorter than the wave one, right? And that limits the potential for wave five, right? And so you need to check whether this is correct, right? So you see that if this is a wave four, okay, this is a wave four, right? It's also a valid count, right? So what happens then if this is a valid count? Uh, so let's be more conservative, right? So initially I thought this could be a wave one, wave two, and then a wave three. Okay, right? That is actually my preferred count, right? But before we go to the preferred count, we look at what if this is the wave three itself. If this is a wave three, then we actually have a maximum target for goal, which is at 3558, right? 3558. So then this becomes the maximum target if there is a wave three. Okay, so let me just put this line over here, right? So this is the alternate count, bullish alternate count, I would say, right? Bullish alternate count target, maximum price target. Okay, so remember this, right? So remember this now. So my preferred count is that this is not a wave three and this is not a wave four. Okay, my preferred count is that this is a subwave one of three, subwave two of three. Right. So the reason is actually more of a bias than any kind of objective assessment. All right. Um, so remember, this is a bias. Okay, this is a bias. What this means is that this I will have with one of three, right? And then here will be the with two or three. Okay, and then we are going to a with three of three here, right? So for this, right, the stop loss did not actually change, right? Um, what happens is that why did not change it, right? In fact, you can kind of slightly shift it up, right? But if you think that this is a wave four, then it shouldn't breach here, right? It shouldn't breach here, which is 3324. Okay, so but if this is a wave two, then there's a possibility that this whole thing can come down to even 3313, right? But this is not what this is not ideal, right? And it will kind of complicate the matters, right? So you can keep this the stop loss that I mentioned 5 hours ago, right? So how do we know whether we have to shift back to the alternate count, right? Is that if this goes down again, okay, and it becomes 1 2 3 4 5, or rather A B C D E, right? Then you tell us that this is slightly a wave four, right? That it will not breach here also, right? It will not breach 3325, okay. But because of a triangle forming, or rather five wave correction, you will tell us that likely this is a wave four, okay. And then we have to go to this bullish alternate count. If not, this is a wave one of three, right? Then wave two of three, and then we will have a target then that it's slightly 1.618, I hope 1.618. Okay, then we will reach 3378. Okay, now this whole move itself, right? I will not change the initial target that I put that I put up 5 hours ago, right? Yeah. So I believe the target was given because of this Fibonacci, which did not change, right? Now, what changed is that wave five, the wave structure changed, right? But wave one has already been fixed. Okay, so the target, we don't change it, right? It's just that this development itself tell us that there's potentially much more power to wave three. Okay, so yeah, we may need to adjust this at a later stage. Okay, once we have more clarity on the waveform. Now, what is important to know regarding gold itself, right, and its relationship with other market, right, particularly to the stock market, is that if this is really a wave three, and if we are in a flight to safety mode, right, that means gold is acting as a flight to safety instead of just a hedge against the dollar, right? There's a distinct difference between these two that you need to know, right? Gold does not always move inversely with S&P 500, for example, right? So it depends on the context. Okay, so if there is a crisis in liquidation, right? In liquidity, I mean, so with liquidation, everything will just converge to a beta of one, right? And even gold will sell down. But that is the extreme situation, like in a crisis or something, right? But if let's say we assume that there is a flight to safety, right, and gold is acting on, in this context, it means that a very powerful wave three means a fall in S&P 500. Now, S&P 500 itself, I've published that I say that it has broken down and it will crash, right? So we are already broken this, right? I put a stop loss here, and luckily it did not hit. Okay, so this is a valid resistance, right? But it wasn't a very good stop loss that I put here, right? Because it goes too close. Okay. Um but in any case, it works, right? And this target is still valid of 5580. Okay, so now I believe we are going to a flight to safety mode, right? So S&P 500 will go down, okay, together with Nasdaq, right? Nasdaq similarly has broken down. I did not publish for Nasdaq, right? But I published for S&P 500. So I use both of them interchangeably, right? S&P 500 or Nasdaq, right? Because their chart setup is very similar. It's just that one breaks down earlier than the other, for example, right? Because sometimes they just move with different volatility, right? So if you look at S&P 500, for example, it actually broke down earlier, right? So yeah, and this is more volatile, for example. So if if you put in if you have short this instead of S&P 500, you move all the way up here, right? This has, in fact, it actually breached the previous high here, okay, before coming straight down. But S&P 500 itself didn't. Okay, S&P 500 itself didn't, right? So there is this overall market uh wariness, right? This overall cautiousness that you need to be aware of, and that is that the equity market is going to correct. Okay, and I mean that's my hypothesis, right? The equity market will collapse and it will cause a flight to safety, which is gold, right? Or the yen, right? Yen, I've been calling for the short for the longest time. You can track my yen short, right? I've called for the update using head and shoulders, for example. Okay, and now this is the conservative target that we already hit, right? We already hit this conservative target. I didn't update for dollar yen per se, right? But the previous one I already mentioned that this is the first one, and then we have a second one. Now everything, if you think about it, they all come together, right? They all come together and tells you a picture of what the financial market is going to experience, right? So just using this three instrument, for example, right? This is S&P 500. It has come down, okay, and then go go went up way before S&P 500 come down. So there's already an anticipation that gold itself is being brought up because uh people are expecting that the market is going to correct, okay, because it's overpriced. Now then this gold move is also confirmed by dollar yen. Okay, because gold and yen, they kind of are the flight to safety instruments, right? That you need to know of. Okay, this is if you're talking about macro view, then you need to understand each of the instrument their users. Okay, I came from a macro hedge fund as a professional portfolio manager previously, so I already know all this. I don't frequently discuss this, right? Because only technical analysis is more objective, right? And macroeconomics kind of things, you need to understand a lot of different things, and there are a lot of subjective portion to it, right? So I need to talk about it when I realized that it's important to know. Okay, but behind all my LOF analysis, for example, I actually have all these context at the back of my mind, right? So for this actually is a uh I'll put this as a Go idea, but know that this is not only an idea on Go, right? It's an idea on Go, on S&P, and on the dollar yen. So you need to know that overall the entire market is or the equity market is weak, and there is going to be a flight to safety, right? So this is what the various instruments is telling us on what's going to happen, right? So that's it for this idea, right? So good luck in your trading, right? And remember to always manage your risk. Thank you. Bye bye.